This video is from Accounting 301, Chapter 4, Question 1. Today we will be focusing on preparing an income statement. The following is a partial trial balance for Tuscan Star Corporation as of December 31st, year 1. So as you can see here, we have a few accounts listed on the trial balance, and these are all related to the income statement. So below we also have other directions. It tells us 413,000 shares of common stock were outstanding through year 1. I would go ahead and write down that number, 413,000 shares of common stock, because we will use that to solve for earnings per share later on. And then we're also told income tax expense has not yet been recorded. The income tax rate is 35%. I would write that down as well, because we will use that later on as well to solve for the income tax expense. And then our directions tell us prepare a multi-step income statement for year 1, including earnings per share disclosures. Multi-step income statement tells us we're going to have an operating section and a non-operating section, so it's going to be more detailed than a single step income statement. Here again we have the accounts we're going to use for the income statement, and I've partially filled out the income statement with some of the accounts or titles we're going to be solving for. Under a multi-step income statement, as I said earlier, you have an operating and non-operating section. The operating here is going to be where we solve, for example, gross profit, and then the operating income. These are going to be expenses and income that are or revenue rather, that are tied directly to the product that the company produces and sells. Other income could be things such as interest, random expenses that they may not see every year. So we will calculate that, and that is our non-operating section. Then we'll calculate what our income is before taxes, calculate our income tax expense to get us net income, which is what we're looking for at the end of the income statement. And then we will solve for earnings per share based off of what our net income is. So let's go ahead and get started by solving for gross profit. Gross profit is our sales revenue. Of $2,266,000, and you subtract cost of goods sold. And our cost of goods sold over here tells us it's $1,157,396. So if we take that difference, that will give us our gross profit of $1,108,604. So what gross profit is basically telling us is how much did we make from how much we sold the product for versus how much it cost us to produce it. So moving on, we'll then calculate our operating expenses. I'm going to put a title for that right below gross profit. And our operating expenses are day-to-day expenses that are frequently incurred. They help sell the product, and you'll see them routinely increasing or decreasing. So selling and general administrative expenses, hopefully our expenses you learned about, those are both operating expenses. So we'll first go ahead and put in the selling expenses here. And that's going to be for $289,277. Then, like I said, we have general and administrative expenses. And that's going to be for $96,426. And then the third and final expense for operating expenses is the loss from write-down of inventory due to obsolescence. That's $122,000. So inventory, that's obviously tied directly to the product we sell. So when something like that happens, we include it in our operating expenses. So loss from inventory write-down. and that's going to be for $122,000. So if we sum all those up, those will get us total operating expenses. And that number is going to be $507,703. So with that, we can then take our gross profit here, subtract it from our total operating expenses, and that will give us operating income. That's going to be $600,000. Let's go ahead and do that in black instead. $600,901. So now we're going to move into the non-operating section of our income statement. So non-operating things could be interest or dividend revenue, and then some of the expenses we have here, for example, interest expense or loss on sale of investments, are not necessarily tied to the day-to-day operations of the company, but are still expenses we of course need to record on the income statement. So we'll start by recording some of the other income we have. First, we see we have interest revenue, $72,500. So we'll plug that in. Switch that to blue. Next, we have the loss on sale of investments. So we record that under non-operating as well. It's going to be $20,000. And in our third non-operating expense, we have interest expense. So that could have been interest we were paying perhaps on a bond payable or some other sort of liability. That's going to be $81,563. So with that, we can then take the net of those three accounts and find our either total other income or other expense. So if we do that, we will come out with a expense or a loss, $29,063. So now, if we take our operating income, $600,901, subtract it from our non-operating income or other income, which is negative $29,063, that will get us our income before taxes. And that number will be $571,838. Now we can calculate our income tax expense. And earlier I asked you to write down what the income tax rate was. And if you recall, it's 35%. So if we take the $571,838 times 35%, that will give us our income tax expense. And that's going to come out to be $200,143. If we then subtract that, we will finally get to our net income. Net income will equal $371,695. So now we can use net income to help solve earnings per share. If you recall, the formula for earnings per share equals net income over the number of common shares outstanding. So we know net income is $371,695. Earlier I asked you to write down the number of shares. That was 413,000. If we solve for that, we will get 90 cents as our earnings per share, and then we just want to report that at the bottom of the income statement. And after you've done that, you've now completed your income statement.